Hi, welcome to this video, which is on the subject of best Forex brokers to trade with, and also Forex brokers with the best pip spreads. Now, in terms of best pip spreads, a lot of traders make that their overriding criteria in terms of choosing a broker. My own view is yes, you want good dealing costs, but you need to consider other criteria as well. Yeah, brokers are very competitive on pip spreads today. And yeah, difference between paying, let's say, 0.5 of a pip or 1 pip in Euro USD, it's not really going to make any difference to your bottom line profits. Now, in terms of some brokers to consider, I'm going to give you some in this video. I'll stress I have no affiliate connection with any of them. I just think they're well worth considering. And I also want to go through some research in terms of pip spreads that many beginners might find surprising. And it's to do with how pip spreads have come down over the last 20 years or so. Basically dealing costs in Forex, the cheapest ever for retail traders. Today, how much difference has it made to bottom line profits for retail traders? I'll give you that research as well. But let's go and take a look at some brokers worthy of consideration. And for this, we will now shift over to a storyboard where I've listed up all the points I want to discuss. So let's go through them in some detail. Right, let's have a look at, first of all, 4 Forex brokers to consider. They will all offer good pip spreads, and they'll also meet other criteria that we like in terms of when we're looking at brokers. There's more. You can check the criteria I give you and go and look for other brokers if you wish, but these 4 that I've got listed here are really good. Oanda, North American clients don't have much choice in terms of brokers. Oanda is the best. They're also regulated in other jurisdictions as well. I really like their trading platform and the way they do unit size. IC Markets, another really good broker, and really good spreads. Pepperstone, another good broker. Well, they're all good brokers, aren't they? Originally from Australia, but regulated in Europe, so are IC Markets. And finally, Saxo Bank, obviously a bank, offer really good pip spreads. And in terms of all these brokers, they all offer a wide variety of pairs, which I consider important. I'll come to that in a moment. And Saxo Bank offer the widest variety of the 4. Now, in terms of a criteria for choosing the above, obviously we said we want good pip spreads. They've got good pip spreads. We want a variety of pairs. And I think, in terms of odd traders, they just look at the majors and trade the majors. I've said this before. You very often get better opportunities in the crosses or more minor pairs. So all those brokers above have got a wide variety of pairs with really good pip spreads in the crosses and minors as well. There tends to be a little bit more variation in pip spreads once you get outside of the majors. They all offer good pip spreads in the minors and crosses. They're all regulated, very important. In terms of regulation, you should always trade with a regulated broker, but avoid Cyprus. The regulation there is really useless, basically. Avoid Cyprus, but regulation is good, obviously. US, UK, Europe, Australia. Go for countries that have strict regulation. And also what you're going to find is there's a lot of brokers who kind of insinuate that they're regulated. They offer really good pip spreads, okay, but they're not regulated at all. They'll be on tropical islands and just say they adhere to local law or local financial regulation, but there's no regulatory body there for trading. Okay, avoid those brokers. Okay, you do find a lot of these unregulated brokers are offering the lowest or some of the lowest spreads of all, but they're not regulated. You have the chance of being basically ripped off, for want of a better word. So it must be strict regulation in our view. Time in business is important. Sure, there are probably quite a few new brokers that are good, but I like a broker that's been established for a good period of time and is really financial stable, has proved themselves to be profitable, strong balance sheet, which you can look up. All the 4 brokers above meet those criteria, or financial stability and time in business. In terms of should you deal with a market maker or an ECN broker, it's not an issue at all, because retail traders don't get ECN, true ECN at all. Any retail broker who thinks they does is very naive. Look at how low spreads are. How can ECN brokers survive on just such minimal income from spreads? They can't. They all do deals with the market makers. They lay the trades off to and split the client losses. And a lot of retail traders get upset that brokers bet against them. It's not a problem. We know the statistics: 90% of traders lose. It's up to us to get 10% that win. Okay, brokers are just like casinos. They know they're going to have some payouts, but the majority of people who walk through their doors are going to lose money. So, don't be intimidated. You've got to get in the 10% of winners. That's your responsibility, okay? The broker betting against you actually is the reason why they can offer such low spreads, isn't it? And right, in terms of spreads and dealing costs, they're now the cheapest ever. They've dramatically declined over the last 20 years or so. But what's the impact on profitability of retail clients? None. Why? It's interesting, this, because for beginners in particular, they're looking for the best pip spreads. The tightest, but you just want decent spreads. This will become clear as I go through this Wall Street Journal study that took 3,000 traders who traded before the internet, and how they got on when they traded on the internet. And when trading came to the internet, dealing costs dropped. They've dropped further since, but 3,000 profitable traders, when they came onto the internet, what happened? Basically, well over 55% of those traders didn't make any money. The ones that did make money, their profits were much lower. Why was that? Well, when you've got low spreads, there's the temptation to go for smaller profits, just snatch profits in and try and get as many winners as you can, because you're covering your transaction costs pretty quickly. You had, with those traders in that study, you had them basically trading more often, simply to snatch profits, and it decreased profitability. Okay, now similar studies have been done since, where traders focus too much on the short term. And when I say the short term, they're looking for 10, 30 pips, 50 pips. It's a waste of time, okay? Because noise levels are higher than ever in Forex markets. When I say noise levels, I mean that sort of spiky price action within trends or consolidation or whatever. And we did a little study here recently of straight line appreciation, depreciation. So basically trends, and then the trend we can see on the chart, we work out the noise levels within those trends. You've got a noise factor plus 30. Basically what that means is very noisy markets. And traders who come in and want to catch small profits just get caught out by the noise. Sure, you can get quite a few winners, but your winners never pay for your losers. Difference between paying a pip or two really should not make a difference if you're trading sensibly. And there is this move in Forex markets over the years, the more shorter and shorter term trading for retail traders. They just don't make any money. Okay, they just get caught in the noise, and it's not a good way to go. If you're trading the Forex markets, you should be looking for 100 pips plus a trade if you can get it. In my view, preferably more. You'll stay outside of the noise, and then the difference between a pip or two on your bottom line profits is not very much at all, is it? So look for decent pip spreads. In my view, trade a wide variety of pairs. And basically, you go for brokers that are really solid, good trading platforms, been around for a while, strong regulation, and do not be tempted to go to the, what is a large number of unregulated brokers, okay, where you will get a minuscule spread, but you're probably going to get ripped off by them because they've got no regulation. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.